You need to be using this hack in order to save up faster for your first home and you get to pay less taxes. Today, I'm going to be showing you step by step on how to implement the strategy using your RRSP and FHSA. The awesome part is that you don't even need to be a first-time homebuyer to implement this strategy. Hi, my name is Alice No, and I am a realtor and CPA located in the GTA. And I've helped many first-time homebuyers like yourselves enter the market. You first need to understand that Canada works on a progressive tax system. So if you were to earn anywhere between $0 to $55,000, that first bracket is taxed at 15%. Then any additional income on top of that from $55,000 all the way to $111,000, that is then taxed at 20.5%. So with your RRSP and FHSA, they are both registered accounts. This means that they come with certain benefits. One of these benefits being that whatever amount you contribute towards them becomes a deduction when you go and prepare your tax return. This is how someone can actually go from a tax owing position to a refund. All right, so this is exactly what you're going to do to implement this strategy. First, you're gonna have to find an income tax calculator. So I'm just using the one here by Wealthsimple, and I've gone down and selected my province. So I am in Ontario. So let's say that you are someone who earns about $55,000 as your salary. And let's assume that you've paid $7,000 in taxes already. So this would be the amount that your company has already remitted to the CRA. You can see here at the end of the year, you would actually be owing $758 in taxes to the CRA. So this is what you are going to do. Grab a calculator and whatever the tax owing amount is, you are going to take that and divide it by your marginal tax rate. So in this case, it is going to be 24%. So what you get is approximately let's round up, $3,200. And what you're gonna do instead is take that and contribute it into your RRSP or your FHSA, or both. So in this case, let's say we've done it, we've made that contribution before March 1st of the following calendar year. And you can see that you are now in a refund position. What you've effectively done is you've actually brought your marginal tax rate from the previous 24% down to 20%. If you have extra capital lying around, you can also contribute that. Just make sure that you are checking your contribution rooms and whether or not that's available. So let's say you put in $5,000 instead, you are now in a refund position of $369. So now the trick is to not spend that $369 on a mini shopping spree. What you do instead is that you contribute it again to your RRSP and FHSA. So now next year, you're gonna have that deduction already done for you. So now you can see here that instead of paying $750 to the government, you get to keep that amount and you've essentially invested it into yourself for the future. One thing to be mindful of when you are doing this is to not exceed your contribution room. So for your FHSA, their annual contribution limit is $8,000. One way you can check your contribution room is to actually log into your CRA online account. And at the very bottom of the summary page, there should be a section that dictates what your contribution limit is. If you are contributing to your FHSA, you have to be making this contribution within the same calendar year. To be extra clear, your FHSA runs on a calendar year, so January to December of the same year, whereas your RRSP almost has a 2-month delay, so it goes from March 1st to the other March of the next year. So if you're looking to reduce your taxes for 2024, you have until March 1st, 2025 to make that contribution. Another nice thing is that you don't need to be making these large lump sum payments at the end of the year. You can choose to invest into your accounts bi-weekly to match your pay stubs, monthly, quarterly, whatever works for you. Now you are equipped with a strategy that you can implement well after you've already purchased your first home. The FHSA is just one of the many programs that are available for first-time home buyers. I have a video in detail of everything that's available to you, and it could be over $140,000 in incentives if you take advantage of them. If you are a buyer and not sure where to start, I have a free buyer's guide that I will link down below. Thank you so much for watching, and I'll see you in the next one.